Hello, everybody. Welcome to Tuesday. The S&P 500 was down 0.2% today. Really, no changes in our signals for the stock market. Both are red, both for a fast and slow trigger. We did make changes to the portfolio today, moving towards T-bill ETFs with a lot of our stock positions left alone the high capital gain taxable issues at this point in time. Did have a change on our bond signals. One of the fast trigger went from green to yellow. Just means that we use shorter term bonds and more TIPS, Treasury, inflation protection, security type issues to accommodate that particular signal. Again, that is just mainly for our IRAs and Roth IRA type accounts as far as that goes. Uh, Really today, not a lot happening today. I think the focus is starting to shift back away from banking a bit as more and more support is coming into the banking system and shift back focus to, the inflationary pressures. If you look at the futures market right now, it is now projecting more than a 50% chance that the Fed will raise rates by, a quarter point at the next meeting. There was some question about that after what was happening with the banks, and that seems to be coming back up. And of course, that's making the bond market fall. That's making the stock market, have a little bit of a challenge here, like it has been throughout this period. We hit a peak, back in January, and we kind of have been coming down just because of the possible inflationary pressures. Economy's been pretty good. We've had a lot of good job reports. We've had a lot of good retail sales reports. And so, if there's money coming out to support the banks, that's actually loosening monetary supply, which theoretically means that there's more chance of inflation. And so the Federal Reserve might go after that. Got some pretty big institutions that are trying to, talk back against the market. The market feels like this will have this one more rate increase, but then the Fed will be lowering rates pretty drastically throughout the rest of the year. There's a BlackRock, for example, they came out and talked about how they feel like that probably won't happen. So there's going to be some adjustments here between what the market is kind of seeing in the futures market versus, kind of what we're maybe really going to experience. And of course, the Fed chairman did mention that he didn't see any rate decreases happening in the latter part of this year either. So I think we're going to get back to this, inflationary picture. However, we are heading into earnings season, which is coming up here shortly. And so sometimes earnings season can be good. We'll see how that plays out. But there's some fear here that, this inflationary situation is going to start to eat into earnings and especially eat into the outlook. When they talk about what they see happening in the next 1 or 2 quarters, there might be some pessimism there just because of what they're seeing here. And maybe the banking situation has some impact on earnings ultimately also, at least the outlook. Because money's going to get tighter, credit availability is going to get tighter also. So look forward to seeing what's going to happen tomorrow. Talk to you then. Thank you.